So everybody understands this. You cannot start a business if you don't understand money. If you have money but if you don't understand money, then you cannot start a business. So having money is one thing and understanding money is another thing, right? Two different things. Financial literacy, why? And why entrepreneurs need financial literacy? What it is? So basically to achieve financial goals. Everybody needs money. Everybody needs money? Yes or no?
Yes.
Yeah. So you are actually starting a venture because you want to multiply your money. If you have 100 rupees, you want to multiply them, right? So planning for achieving milestones. You have certain milestones in your mind, you want to achieve them. You get the ability, once you are financially literate, you understand, you can evaluate your options. You've got many options, many opportunities, limited resources. So what you need is, you need the ability to evaluate your options. So that is why you can, with financial knowledge, you can evaluate, you can manage your finances, you can make prudent decisions for achieving your goals. This PPT will be shared with everyone, so you did not note down, that's okay. Yeah, you can share it with everyone. Basic, so why you need an understanding. These are the financial terms which will slowly take, and if you don't understand also, you can stop me and ask me. Cash flow. What is cash flow? Non-finance persons, I would like non-finance persons to answer. Some finance people are also sitting, so I don't want them to answer. What is the cash flow?
The amount of money that you receive and it goes out.
And goes out. So you have to manage your cash flows. Otherwise, you won't have enough money to spend. Alright? So you have to manage the timings, you have to manage the expenditures, what expenditures are going to come. You have to plan for that. Then only you can understand. Basic economic and financial concepts. Throughout we will learn some economic and financial concepts. Debt and risk management. Every business has a risk. Agree? Every business has a risk. So you need to know how to manage that risk. Right? So you take debt. For example, you take debt from somebody because you won't invest entire your money. You won't have that much money. So what you will do, you will borrow from somebody. So that is known as debt. Right? That is a common terminology used in finance. So basically what it is, borrowings. You borrow money. When you don't have money, you borrow from somebody. So you should know, once you have borrowed, means it involves a cost. Alright? It will involve a cost. If you borrow from the bank, they will charge you interest. Alright? So it involves a cost. It involves a timing. So that timing will involve a cost. More time you borrow, more cost. So that is why you have to learn how to manage that risk. Sometimes you may not be able to repay back. May be possible. Your business has gone into loss. Right? So you have to understand that risk, what risk it involves. So basically, achieving financial literacy, how do you achieve? There are basic 5 key areas of finance where you have to focus on. Income, of course, what are my sources of income? How I will get money. Money management, how that money will be managed. Whatever money I have, how do I manage it? Spending and debt. You have to spend on various alternatives, as we talked about. There can be various alternatives on which you have to spend. You have to decide where to spend. For spending that money, maybe you have to take a debt. So that is why spending and debt is important. Savings and investments. You save money. You have 100 rupees. You may save some money. You will not spend the entire money, of course. That saved money you are going to invest in. The common modes of investment, people invest in stock market. So you may invest in a business. Right? So once you invest it, if you have saved money, it will not earn anything. But you invest it somewhere, it will again earn some income on it. Risk management, we have already talked about. The first part, income. You have to understand time is money. If you take care of the time, it will earn you money. Money management basically entails that you have to make a budget. The first and foremost step in money management is you have to make a budget. At your home also, you make a budget saying that how much money I have, where I am going to spend. You have to set your priorities also. You will have n number of expenditures for you. But unless you set up a priority, you will not be able to. Otherwise, if everything you try to do, you can't do it. Right? So you have to make a budget. What is going to be your inflow? What outflows you are required to do, and priority wise. Say this month I'll do this. You know, you normally decide this month I'll buy a TV, next month I'll buy a furniture. At your home you do that. Same thing you have to do it in the business. Spending and debt, as we talked about, benefits and cost of spending alternatives. You have many alternatives. In a business venture, there will be, to do the same thing, you will have 4 options. So you have to evaluate those options. Find out that how those options will work for you. So for finding out that, you will always try to find out the benefits and cost. Why? Because ultimately you want to earn a profit. So benefits, what benefit you are going to get, minus cost. So that is your profit. So you are going to evaluate in that manner. Credit as a basic financial tool. As we discussed that we cannot spend the entire money ourselves. We may not have it. So we need to borrow money. Borrow money is your credit. This is an important financial tool, but while borrowing money, you have to be very, very careful that its cost should not exceed the benefits. Alright? The benefits should always exceed the cost. Unless the benefit exceeds the cost, there is no point in borrowing the money. Savings and investment. Savings, you don't spend money. Investing, you earn a return on the money you put into anything. Risk management, how do you try to manage your risk? You may take insurance. For example, in a industry, if there are stocks, you will take insurance for that, so that tomorrow if some natural calamity happens or whatever happens, you have a insurance for it. Understanding the markets, it is a risk. Your product may be sold or may not be sold, or there may be downfall. So you have to understand what is the market, at what time the market is, and how it is. Identify theft. There can be identity theft also. You understand what is identity theft?
No.
So, for example, your passwords are stolen. Like your bank passwords are stolen. You are passing your signature, somebody may copy. So this is your identity theft also happens. So you have to identify these thefts, that what are these thefts and how it will occur and how you have to be careful about it. This is very, very important. These are the risks which you have to manage. You have to understand about that. You have to always, yeah, please.
So is investing in insurance always beneficial?
No, not always. So there again you have to evaluate that maybe your insurance premium is very high.
Right.
So always see medical insurance you take. So you know that if I take 10 disease, then of course the insurance premium will be high. If I take only 2 disease, the insurance premium will be low.
Right.
So again you have to evaluate. Unless you evaluate any proposal. So this is also insurance proposal which you have to evaluate.
Okay.
If you feel that no, it is not worth it, then you may not take it. Or you feel that the risk is lower.
Yeah.
If the risk is lower, definitely you will not take that insurance. Right? So you have to again evaluate. Evaluation is very, very important, for which you have to understand the basic concepts. So basic concepts are what? Risk. How much risk is involved in a particular venture?
Yeah.
Alright? Nowadays, even the CEO's liability risk is covered by the insurance. For example, if CEO takes a wrong decision, so that risk is also covered. But then that is a very high price. Right? So whether you can afford that, maybe initial years you may not afford it. But in future, the decisions are more important for you. So there's a risk. So you may take that insurance. Why? Because you have that much money to take that insurance. Money availability is also there. Profit should be there. Without profit, how will you do it? Always go for a long-term financial plan. Short-term financial plan, of course, is there. But first you have to start with the long-term financial. What you want to achieve in future. What financial goals you have. So that is more important. So for that, you have to establish a good credit. Good credit means your creditability in the market should be good. Unless it is good, nobody will give you, you can't borrow money from the market, right? So, plus nobody will come and buy your product also. So your creditability is important for everything. Understand real cost, means what is the actual cost which is going into a proposal, please. Credibility means my reputation in the market. Okay. Right. Suppose today I take a loan from you and I don't repay you. So I don't have a creditability, right? You will not believe on me next time. And plus you will tell your friends also that she is not to be believed. Why? Because she is not repaid my money in time. I had given her money for 10 days. She did not repay. Yes. Right? So my reputation, my creditability, I have to establish that credit. If I want to have a nice venture, nice business, then people has to have trust on me.
Yes.
Right? For that, I have to build my credibility. It will not come automatically. You won't believe on me. First time you will believe on me, but next time you won't. Right? We will talk about the cost. What are the types of cost in the future slides or further study. Assess risk. Again, evaluate, assess what is the risk in that particular business venture. What I am talking is making sense to everybody?
Yes.
Yeah?
Yes.
Financing. How do you do financing? First step is make a budget. Manage your risk through insurance. Instill financial literacy. That thing should be in your mind. Starting a business, you have to understand the cash flows as we talked about, the inflow, cash inflow and the cash outflow. Expense timing, when is the expense to be incurred? Based on that you will borrow. Suppose you need the expense, next month you need more money. So you can't borrow today. You will borrow next month. Otherwise it will involve a cost. So timing is also very important. Manage your income and expenditure. Sometimes there may be unexpected things happening. Alright, so what will happen? It will lead to loss. Now, the next part of my talk, I'll talk something about a business plan. How do you start a venture? And what are the things that you will consider in that business plan? This is a very basic and first lecture, so we are covering the basics. Future, we will take some more concepts. Planning as a part of the business operation. The first step is the plan. You have to plan. So planning never ends for a business. It will continue. You have to keep on revising also your plans. You have to keep on updating your plans. And you have to make a follow-up on the plans also. That what plan you had made, what is the progress that you have made, what is the controls that you have instilled, and based on that you will continue. What is a business plan? Simple definition. It's a written document that describes everything. We'll just cover few topics that what are the contents of this business plan, that also will cover. An integration of functional plans. Basically it is an integration of all the functional plans. What are those functional plans? Marketing, yes. How you are going to market your product or service. Finances, financial plan, budgeting. Sales, how you are going to sell, how you are going to distribute your product in the market. What is your market area, right? Sales, manufacturing, how you are going to manufacture that item. What are the human resources required? For any venture you require a human resource, you alone cannot do it. So that also comes into plan. Who should write the plan? Of course, the entrepreneur, you yourself if you are starting a new venture, but you cannot alone do it. So you need help of all these people. Lawyers, marketing consultants, accountants, engineers, you need help from them. Right? If it is a technical subject, you need help from the engineer. Marketing, because how you are going to market your product. Lawyers, because there are many legal angles attached. You just can't start your venture. Right? You need certain legal aspects to be covered, like you need a license. So how do you go about it? You need a GST number. How do you go about it? Right? Many things. Accountants, of course, finance. Who reads the plans? So basically the stakeholders. Who are the stakeholders? Investors, employees. Everybody needs to know this plan. Otherwise you are not committed to that. Right? Suppliers, because they want to supply raw material to you. Unless they know that yeah, this venture is successful, they won't supply material to you. If they feel that there is going to be a loss, they won't supply material to you. Alright? They also need your credibility in the market. So customers will not buy your product unless they feel that yes, you are a reliable person who will give us a good product at a good price, at a reasonable price. Bankers, you are going to go for what? Loans, right? Asking money from them. Venture capitalists, these are also investors. So big business, then these are the venture capitalists. Advisors and consultants, they also sometimes they want to advise you. But how will they advise unless they know your business plan? Business plan always has to be from this three important perspectives. One is the entrepreneurial perspective. All the perspectives have to be covered. It's not different for all the three. Right? Marketing perspective and investor. These are the three important perspectives that you have to cover in a business plan. Users of business plan, we just talked about everybody, insiders, outsiders. Insiders, it's the management, the employees. Outsiders, it is the customers, lenders, suppliers, investors. So this will determine the viability of a venture in a designated market. Unless you present a business plan to anybody, how will others know that what you are going to do? How you are going to benefit out of it, right? So unless you have this, nobody can determine the viability of this venture in a designated market. This is very important because every product or a service is sold in a particular market. So you should understand where is my market, right? My product, if I am launching something, where is the market for it? Unless there is a market, you will just launch it and you will just go ahead. But when there is no market, no customers, how will you sell that product? Guidance to entrepreneur in organizing planned activities. They have already planned something, so they will organize it in a better way. Helps in obtaining finance. You always need some guidance. So that guidance is your business plan. You can't just start. Okay, you feel today, yeah.
Ma'am, the customers need not know the entire business plan, na?
I agree with you. Then what you will do, you will share a particular part of it.
Yes.
Right? Or else, tomorrow if suppose you have a very big customer, a very big order coming, then what you will do? You will share the entire business plan?
Yes.
Not the technicalities, how you are going to do it, but you will share that what is my product, then how it is going to be placed in the market. Suppose it's a very big order, so customers would always like to know about it.
Okay.
So unless you, of course not in the same shape you will present to them, you are right, not in the same shape, but maybe some information you will hide, the technical part of it, for example, how do you produce the product, the process of the product. So those things you will hide, but otherwise you will present that what is my market, what is the product, what is the quality of the product, right? Why? Because you want that order to come.
Customers are more likely to read the business plan if the business is a B2B business.
Yeah, agree. I agree with. Definite. Helps in obtaining finance. This is of course very important. Tomorrow if you want to borrow money from the bank, it will help you. Presenting the plan to potential investors. Of course you have prepared the plan, but unless you present it properly, maybe people will not give you money or they will not invest in your business. Right? So the presentation is also very important. Right? A short 20 to 30 minutes because nobody has time. Please keep this in mind that normally you know what happens if suppose some goes with a business plan and they keep on going and going for hours together. Nobody has that much of time. So you should know how to make that presentation. Only 20 to 30 minutes presentation will help them. You have to cover the main points and then only it will be successful. Otherwise people are not interested to listen to you. Right? Nobody has that much of time. For preparing a business plan, what do you need? Information. You have to gather information on every aspect of the business. So before committing your time and energy, just don't start preparing the business plan. First, obtain information as much as possible. Today you have got so many, yeah please.
Actually, the pitching time has come down to 5 minutes now to VCs.
I fully agree with you. I fully agree with you. That is, you have to be very crisp and clear.
Crisp and clear.
Yeah, very much. I fully agree with you. People don't have that much 20 to 30 minutes also. So, entrepreneurs should do a feasibility study. First, gather information, do a feasibility study whether the product will be successful or not, the market which you have identified, there the customers are there or not, whether it is as per their liking, whether it is the quality, what they want. You have studied the customer's needs, their preferences, their wants. Accordingly, you have designed it. This is an outline of a business plan. This you can find it in the net also, but still, I have just briefed it. Introductory page, what you have to do. This you can read it anyway. The PPT will be with you. Executive summary. What is the business concept? How is the business unique? This point is very important. If your business is something different from the others, it has to be unique. If it is unique, definitely you will get the market and your business plan will be successful. Who are the individuals? We talked about creditability. So, who are the individuals who are starting? If I don't know you, I would not like to invest in your business, right? So knowing you is also important. How will they make money? How much money? Money is the most important part. Then you do an environmental and industry analysis, how you have done it. You just mentioned that. What is the future outlook for it, for the product or the service, the trend that that is going to happen. Analysis of competitors. This is very, very important because you will have competitors in the market. So competition is always there, though your product may be unique, but competition is always there. So you have to be very, very careful because your competitors are also looking towards you. And they are also revising their plans based on your action. So you have to be focusing on their actions also. Similar. Market segmentation means where is my market, right? How do I segment the market in such a manner that similar needs and wants people are at one place, right? So you will try to segment the market, maybe on geographical area, maybe on their needs. So there may be different types of segmentations. So you will try to segment the market so that you are able to identify their needs in a better way. Industry and market forecast are available in the market. So you will also see that. You will see the past trend, what has happened, and you will try to forecast.
Could you please explain the difference between micro and macro environment?
So basically see, if you see over here only, macro environment is the bigger picture, right? And micro environment is the smaller picture. So in the bigger picture, there are factors which are not under your control if you see. The technology may change, right? Economics, you read every day, RBI changes interest rates. These things are not under your control. Environmental, COVID happened or whatever environment, there may be some flood, there may be some earthquake. These things are not under your control. Socially, things may change, right? Today you have, what we had, we did not have computers also at our times. Today, without computer you can't survive. Without mobile you can't survive. So these are all your social changes, right? WhatsApp, you have to be active on WhatsApp. You have to be active on LinkedIn, right? Without that your business will not succeed. Political and legal, of course, it makes a lot of difference. Political, anything happens politically. Sarkar change हो जाती है, क्या होता है? Policies change होता है. So you have to be very careful about this. So these are the factors which are not under your control, but you have to be aware of them. If you are not aware, then you can't act accordingly. You have to keep on revising your plans. You just can't stick to one, that एक बार plan बनाया हो गया. No, you can't. The micro environment is the people who are directly related to you, to your business. Distributors, customers, competitors, suppliers, right? These are all directly related to you. Supplier says tomorrow I can't supply you this material or I can't deliver at your doorstep. So you have to immediately change your plan that okay, I will get it delivered. Okay. So customers, of course, you have to be very careful that customers, what they need, their needs, wants, you have to be very particular. They may need something which you have not designed. So you have to immediately be aware that yes, I have to now change my design. Distributors, of course, they are a part and parcel of you. Competitors, you have to be aware of them. They may not directly, you don't have control on them, but you have control that if you do something, how they will react. So those things you have to keep in mind.
Ma'am,
Yeah.
market segmentation with respect to geography.
Market segmentation with respect to geography means suppose you have opened your venture in Pune. Alright. So now you have to decide that whether I want to cover South area or I want to cover only Maharashtra. Right? Where are my customers located? Maybe there's some agricultural produce which is produced in Maharashtra.
Yes.
Right? So based on that you will decide that this geographical area I want to cover. Slowly you will try to cover more geographical areas. Right? So you will segment your market according to areas. And then first you will focus only on Maharashtra, say. Tomorrow you feel that yeah, I can expand to Gujarat also. Then you will shift your focus there also. Right? This is basically segmentation. Description of the venture. With this we are talking about the outline of the business plan. So of course what product you are going to produce, size of the business, how big it is going to be. Initially maybe it is small, then slowly you will expand. Who are the persons you will require, whom you need to hire, whom you need to recruit. Recruitment is also an important part. If you hire wrong people, then it's a problem. Everything you can't handle. So of course you have to delegate your work. That is also very important. Background of entrepreneurs. This also is very important, that what is your background. You are of an engineering background. you get some knowledge of finance, but you have to hire a finance expert, right? You have to hire somebody, a legal expert who will help you. Production plan, this is very important. Manufacturing, what is going to be the process of manufacturing? What are the machinery and equipments that you are going to buy for this, making this product? Who are going to be your suppliers? Tomorrow you manufacture, you decide to manufacture a product, you buy a plant and you don't know who are the suppliers of the raw materials. Then it's difficult. So timing is also very important, that you have to plan in advance. All this what we are discussing, let me tell you, if we do a fault in this, there is a problem. So you have to be careful about each and every step and each and everything. One place you go wrong, things can go wrong. Right? Operational plan, how the operations are going to take place. Flow of orders for goods and services means how raw material will come, where it will be stored, what is going to be the flow from machine to machine, how it is going to reach the dispatch section, how it is going to be dispatched to the customers. All this flow also has to be defined. Everything you should define in advance. Don't think that I'll start my business and then I'll define all this. Technology utilization, of course, technology is very important. It keeps on changing. So you should be aware that I have to use this, my software, whatever software which will help me to do faster things, right? Marketing plan, very important. How you are going to price your product. We'll talk about the cost elements. That time we'll discuss about the pricing. Distribution, how you are going to distribute to the customers. Promotion means marketing, basically how you are going to promote your product, advertisement, right? Product forecast, you have to forecast how much quantity is going to be sold in the market. Based on that, you will design your production. So all these plans are actually interrelated. Unless you know how much product is going to be sold in the market, how are you going to produce? Right? You should know how much is going to be sold. You can't keep your inventory block. It again calls for cost. Right? You manufacture 100 and malum pada market mein only 10 you can sell. Right? So you have to be careful. Controls, you have to instill some controls so that things are in shape. Organizational plan, form of ownership. Whether you want a proprietorship, your venture, whether you wanted partnership, whether you want to float a company, right? There are various types of organizations. If it is a small, you will normally go for a proprietor. Slowly you expand, you will have some partners with you. Right? So the legal form is very important, that what ownership you want. Identification of partners and principal shareholders. If it is a company, there will be shareholders. Authority of principals. Now, the moment you have partners, your authority also, control has to be reduced, because anyone who is investing would require some hold on the business. So you have to be ready to shell that. You can't say that I want money, but I want control in myself. So there are different types of investors who can agree for that also. But then you have to first decide how you want it, and then you have to approach the investors. Management team background, this is very, very important, that your management, who is your management team? So it has to be a team, it cannot be an individual. So all types of experts. Roles and responsibilities of each and everybody. I have seen many organizations that there are so much confusions in roles and responsibilities. Then it's very difficult to go ahead, because you 4 of you are there, you are doing the same thing, or there is a clash. If you are doing the same thing, definitely there will be a clash. The roles and responsibilities have to be clearly defined, that this person is going to do this person is going to do this. What is a balance sheet? Balance sheet is basically on a particular day, what are your liabilities and what are your assets. Assets means in the nature of plant and machinery is your asset, right? Debtors means you are going to receive money from somebody, so that is your asset. What is your liability? You have to repay the loans, that is your liability, right? Whatever money you have put into the business, that is also liability. Why? Because you have invested something on which you are going to earn income. So that money what you have invested, so this is a balance sheet, means basically what you are going to, what you have with you, and liability is what you have to pay to others. So in a business, this should always match. Income and expenditure, you will have more income. You should have an income, means your income side should be more than the expenditure. But in a balance sheet it will be same. Why? Because as on a particular day, whatever you owe to somebody has to come from somewhere.
Yes.
Okay, later on we'll discuss the formats and all that. Just a brief so that you all know how to analyze the balance sheet. Because then only you will come to know that whether that venture is profitable or not.
So is insurance a liability?
Insurance is an expenditure, a premium. Insurance premium, what you are paying is an expenditure. That will come in your pro forma income statement. Here is your income and expenditure. It's not a asset or a liability, right? You are spending some money. Yearly you are spending some money.
Yeah.
Correct? So that money is spent. So that's an expenditure,
Okay.
right? So it's not your liability. Why it's not a liability? You have spent something. Tomorrow if something happens, you will get money. Correct? So that is why it's not liability. What is liability? Something which is payable to somebody. For example, credit, suppliers. Suppliers, they have supplied us raw material. I have to repay them. So that's my liability today.
Okay.
What's the difference?
So investment can be
Investment is
considered to be asset, right?
If you have invested in something, it's your asset.
Yeah.
If somebody has invested in you, it is a liability. Why? Because you have to repay them back.
Right.
But if you have invested in some shares or you have invested in some other company, then it is your asset.
So,
Trying to understand the difference?
so while taking insurance, won't we like invest in health?
See, we will talk from business point of view,
Yeah.
right? So business point of view, what you have done is you have paid a premium. If suppose tomorrow nothing happens, your health is good, nothing happens, will that money come back to you? So it is an expenditure
Right.
for that particular year.
Right.
Its benefit you are not going to get in future years.
Right.
Something which you are going to get benefit in future years. For example, you have bought a plant and machinery. So you are going to get the benefit in future years.
Yes.
So you treat it as an asset. Why? Because it is my property.
Okay.
Whose benefit I am going to take in future.
Right.
Liability is what I am going to. Now you tell
So
me.
like, so when we'll be gaining the benefits from the insurance, will we consider
That will be considered as an income. Why? I'll tell you.
Okay.
Because you have lost something. So there's a loss.
Right.
Right? This furniture is burnt.
Yeah.
You took a insurance. You paid a premium. That is an expenditure. That is clear.
Right.
Then you that is burnt by fire. So again you have got a loss. Furniture is an asset, but now it is lost.
Yes.
So you get some money out of it. That is also only for that particular year.
Right.
You're not going to get benefit in future years.
Yeah.
So you take it as an income.
Okay.
Got it?
Ma'am,
Yeah.
why should number of liabilities and assets be equal?
Number of liabilities and assets should be equal. Why? Because you tell me how you have some 100 rupees in your pocket. Okay. You will buy something, you will borrow something.
Yes.
So ultimately it is zero, na matlab. Whenever you have 100 rupees in your pocket, so what you will do, you will either buy something, right? Suppose you bought 110 rupees. So 10 rupees what you will do? You will borrow from somebody.
Yes.
You don't have money for giving the 10 rupees, na?
Yes.
Got it?
Yeah.
So it has to always be equal.
Can't assets be more than liabilities?
Assets cannot be more than liabilities because from where you have purchased those assets? From something which you had in your hand,
Yes.
either borrowing or your own money.
Yes.
Right, so we try to see, what we try to see, that you have to analyze. That what I try to see is that I have got 100 rupees where I have spent. I want to know that. That is why a balance sheet is prepared, so that I want to know that who has given me money, where I have to pay them back, so and how I have utilized that.
Okay.
The money which I borrowed from, say, her, 100 rupees I borrowed from her, where I have utilized, I bought plant and machinery. Right?
That is our asset.
That is my asset.
Okay.
Got it? Yeah.
Is it sometimes considered good to have more liabilities in a company that's profitable so that they can show lesser taxation? As in, if a person buys a vehicle, it has a depreciation cost every
Right.
year,
Right.
but it is adding to the workforce and helping the company grow.
See,
But
if you keep your liabilities more, right? Tomorrow, suppose you have to wind up the business. Will you be able to repay them? No? So, you should always have so your liabilities and assets will always be equal. Otherwise, you won't be able to repay to them. Right? Suppose if tomorrow you want to wind up the business. How will you repay those creditors? How will you repay those bankers who have given you loan? Your creditability will be gone. Alright? So if you are, what you are saying is, keeping liabilities more means you are borrowing, right? You are borrowing more, you are investing it in a business which is more profitable and you are paying less interest. Correct? Suppose your interest rate is 6% and your business is earning 15%. So definitely borrowing is more beneficial. But what I am talking about is liabilities and assets means whatever I should have from wherever I must have borrowed. That should always equal my what I have done. Basically I want to understand what are my, from where I have borrowed money and where I have invested it.
I just want to know whether the idea of having liabilities is actually giving a positive connotation.
Provided your profitability rate is more than the interest rate.
So that is a legal loophole that we can
But
use to-
again, there is a risk attached to it. Why? Tomorrow, suppose today your product is selling very well and it is giving you 15% in returns. Tomorrow, suppose something happens, some calamity happens and your product is not sold. Then your risk is what? How will you repay that loan back?
Insurance.
Yeah, you take an insurance. Agree. But then you have to pay. That also comes with a price. You have to pay premium. Suppose nothing happens to business, one day you will feel, why did I pay so much of premium? It happens, na? Health insurance you pay and then you realize that, why did I pay so much of premium? Please.
Ma'am, I think he's relating to the profitability part and taxation part, which will be as a result of higher liabilities, lower taxation because of lower profits. I think that's what.
But then you want more profit also, na?
Yeah.
So why you are afraid of paying taxes? If you are
But,
earning more profit, you should pay
People
taxes
can
also.
buy personal goods under the company's name so that they can actually live off the company profits also.
But see, ultimately, your aim should be to earn more profits. See, these are all temporary gap arrangements. Right? You want to avoid taxes, you want to earn more. So, you do in a business in a fair manner, you pay taxes, everybody is benefited, the government is benefited. These are all ethics, na? Government is benefited, citizens is benefited, you are benefited because you are earning more profit. Correct? Please, sir.
Coming back to that insurance part, when your asset is destroyed in fire probably, you're treating the realization of that premium as an income.
Yes.
So that will be taxable?
It is other income, but it is taxable. Yes, if there is
Unless I
a profit.
reinvest it.
What we do is, I'll tell you. For example, this furniture is 5,000 rupees and it's depreciation. Every year you provide depreciation, say 10%.
Yeah.
So after 10 years, its value is 0.
Okay.
So you have actually earned a profit.
Okay.
Similarly, there can be a loss also. Suppose within 2 years, the asset is gone. So your depreciated value was only 5,000 minus, say 10% means 1,000 rupees minus. So 4,000 was the value of your asset.
Okay.
Right? Suppose you have got 10,000 rupees from that. So 5,000 is your profit. Suppose you have got only 4,000. So 1,000 is your loss.
Okay.
So if there is a profit, you have to pay. But ultimately, it will be the net profit.
And if I use that money again to repurchase that asset which has been lost?
That is completely independent.
That is a separate.
Completely independent.
Oh.
Yeah.
How often should a business do this analysis?
Monthly. Annual statements are prepared monthly. In our government institute, we prepare only annually because we don't have a profit motive. But otherwise, you should do it monthly. In a company, in a business venture, you should do it monthly. In fact, nowadays you have softwares where daily you can see what is your asset, what is your liability. So you should keep track of that. Right? Yeah, GST you pay monthly, but see, unless, now suppose tomorrow if you realize that your liabilities is going really hayway, then you will keep a control on them. So daily you should see, in fact, because now there are softwares available. It's not that earlier we used to do it manually, so it was very difficult. Right? You had some questions? Yeah.
Are assets and liabilities always equal or should they be?
They should be equal.
Can you name one company listed in the stock market that doesn't have?
No, it has to tally. As these are the accounting norms where asset and liability has to be equal.
Okay, if assets and liabilities are not equal, then that must be an accounting fraud.
It cannot, you will not find a single balance sheet where assets and liabilities are not equal. Why? Because whatever money you have yourself or borrowed, that only you will spend. Na? I give you an example of that pocket mein 100 rupees hai. So you can't spend 110 unless you borrow 10 rupees from somebody. So it has to be always equal. Alright? How will you spend 110 without borrowing? You tell me. or taking a credit from the market. You go to a shop, you have only 100 rupees. The shopkeeper will tell you, ठीक है, कल आके दे देना. So he has given you a credit. So that is a liability. You got the point. You have spent 110 for say buying a furniture. That is your asset.
But suppose I am a salaried person and I have 100 rupees salary and I buy 10 rupees chocolate. So then what are the assets and liabilities in this?
So 10 rupees is your water chocolate. Say in this case it is a revenue expenditure, but now because we are talking about balance sheet, we'll talk in that terms only. So 10 rupees you will show that I have spent. Okay, fine. 90 rupees is still lying in your bank. So that is your asset. You can spend it in future. Got it? And income side is 100 rupees. Tally?
Is the chocolate an asset?
No, chocolate is not an asset. So that will come under income and income statement. So here what he talked about, this example, it will be 100 rupees income. 10 rupees you will show it as an expense. So 90 rupees you will carry to your balance sheet. Why? Because it is available to you for future use. Correct? And where is that 90 rupees? In a bank. So your liability is 90 rupees still there to be spent in future. And where is that 90 rupees kept? In a bank. So that is your asset. So liability and asset matched. Got it? You want me to show it through a diagram? This is your income and expenditure statement, right? 100 rupees is your salary income. So this is your income. You have spent 10 rupees on buying chocolates. Right? So 90 rupees is left. So what you will do? Buy to profit. It's actually a profit. 90 rupees. So this profit belongs to you. Now we talk about a balance sheet. So balance sheet by liabilities and assets. So 90 rupees is your money. If you take it in the business terms, means you are investing this money somewhere. So where at present you have invested, so this is your profit which belongs to you. You are an independent entity. Please remember this. You are an independent entity from the business. Business is different and you are different. Right? So because this profit 90 is your money. Your money means business is liable to give it to you for future spending. And this 90 rupees is in a bank account or cash. It is in the form of cash with you. So this is your money invested somewhere or it is lying with you. So this will always tell it. Okay, this we are talking in very simple terms. Later we'll take some more little business terms maybe. Right?
Ma'am, we can say source of fund and application of fund.
Right. In government accounting, we say sources of funds and application, means from where the funds have come and where you have applied it. The last page of your business plan, appendix, you will attach all whatever papers you have used to make that business plan. Maybe you have got some letters from some suppliers that okay, we are ready to supply this material, or you have made contracts with somebody for supply of equipment. So those things will be a part of this. Market research data, of course you have done a lot of research on the market. Leases and contracts if you have entered into with anybody. Price list from suppliers also you can attach if you have. Right? So that the other person gets an idea at what price you are going to get the raw material. Implementing the business plan. You have made the business plan? Everybody has made it? Okay. In future we'll do some exercises on this so that you get an idea. So you have planned, now it's time to execute. So implementation of the plan, strategy, what you have made. Control points are very important because whatever plans you have made, you have to monitor them in future. See that you have achieved the desired progress. If not, what corrections you have to make. It should not end up in a drawer. Many times it happens, you made the plan but finally you are doing whatever you like doing it and you are practically forgotten about it that you had made a plan. So do not keep it in your drawer. Measuring of plan progress is very important. Check the profit and loss statement. Do you want me to wind up? Then I'll... It's okay, na? It's okay everybody? Yeah. Keep on checking your Annual statements, profit and loss statement, cash flow projections, whether you made the business. Of course, there will be changes. What you plan will not be exactly true. But you have to keep on seeing that there is no major deviation. If it is there, you have to correct yourself. It's an alarm to you that I want some corrections has to be made. Because things are not going as per what we had thought of. Inventory control. As I told you that you should not keep more inventory. Why? Because it comes with a cost. You have to storage, you have to incur storage cost. Alright? Production control, production units, what units you are producing, that has to be under control. Quality is very, very important, otherwise marketing, you will fail in market. Sales control, the number of units that you are selling, that is also very important. Updating the plan, as we told that everything doesn't go as per your plan. So this plan may have become obsolete because IT sector is the most prominent example. Conditions change, you have to continuously do revisions. This will lead to your maintenance of reasonable targets and venture will be a success. Some business plans fail. Failures are there. So why it fails? You have set some goals which are unreasonable, right? You have to be practical. Goals are not measurable at all. You are not able to measure them, so no controls. You are not able to control them. Lack of total commitment. You have to be totally committed to the business, right? No experience. You have got no experience, right? You did not get enough data. No analysis of threats and weaknesses, what we talked about earlier. So this may lead to problems. You don't know customers, you don't know who are your customers, you have not made a proper analysis. Now we are trying to understand some basic concepts of cost. Anybody knows what is a variable cost and what is a fixed cost? Yeah, please.
The raw material is variable cost, whereas office expenses like electricity or something like that will be fixed cost, which has to be incurred in any condition.
Right, very good.
How electricity is fixed? Electricity will also be variable.
Actually, the rent is fixed.
Yeah, rent is the most prominent example, but what he is talking about is electricity of an office space. Suppose you have taken an office space, so you have to incur, so that has to be fixed normally. Right? So this also I would like to explain to you with an example that how it behaves with a diagram. With this diagram you will understand it better. So here is say quantity and here is your say cost or expenses. We'll call it as expenses. Right? So suppose you are manufacturing 10 number, 20 number and 30 number. So variable cost is a cost which will be proportional. If you manufacture 10, then suppose your expense is 100 rupees. If you manufacture 20, it will be 200. So how will your curve go? This way? But fixed expenses, whether you manufacture 10, 20 or 30, it will be same. So this is basically what we mean by variable and fixed. Why do we want to know that, why do we want to bifurcate this expenses, variable and fixed? Can anybody tell me? Why this bifurcation is required?
To understand the level of units to be sold to achieve a profit, below which it could be a loss.
Correct. Below which it could be a loss. Perfectly correct. So you have to, you should know that if I manufacture 10, what will be my cost? If I manufacture 20, what will be my cost? This fixed expenses, more the quantity, this fixed expenses will get distributed over the number of units. So it is beneficial for you. Right? Till a particular capacity, you know, normally a plant has a capacity of manufacturing X number of product. So this will remain the same till that capacity is achieved. So the more you utilize this capacity, your fixed expenses will be distributed. So per unit cost reduces. More the number of units, the per unit cost reduces. This everybody knows. Manufacturing, when you are manufacturing something, more the number of units you produce. So that is why this bifurcation is very important. Because yeah.
So the salary will be in variable or will be in
If it is say workers' wages, that will be variable. Why? Because more the number of units you produce, you will employ more number of laborers. Right? But office salaries, it will remain constant, so it is fixed. So you should always,
Isn't time a factor to be considered
in sense what?
in variable or fixed? When we are categorizing cost to variable or fixed, along with time, a fixed cost might vary or something like that.
See, then what you will have to do, you will have to divide that cost into two parts. The variable portion separate and the fixed portion separate. Unless you do that, you will not be able to derive the per unit cost.
Okay.
Right? And where you are going to make, the line where you are going to make a loss and the line above which you are going to make a profit. Maybe at this 20 numbers you will make a break even, no profit, no loss. So you know that I have to manufacture more than 20.
Right.
Otherwise I will not get a profit. So unless you divide all the expenses into fixed and variable, though it is based on time. So again you have to derive what is the fixed element in it and what is the variable element. Right?
Fixed costs are not permanently fixed, right?
Yeah, of course. That I said one example I gave you, that beyond a particular capacity. This plant has a capacity of manufacturing only 10,000. So of course beyond 10,000 it will go. Similarly, suppose today you are manufacturing X number of units, so you need this big space. Tomorrow if you are going to double that capacity, you will need double the space. So your fixed expenses will increase. Definitely. Right? The second type of expenditure is capex and opex. Does anybody know capex? Capital expenditure, and opex is operational expenditure. Can you give me example of capital expenditure?
Machinery.
Machinery, right. Furniture, we talked about. Operational is something for the operation of the business. This also you should know why. Because capital expenditure you are going to incur once, and its benefit you are going to earn over the years. So that we treat it, as we talked about in the balance sheet, as an asset, because you are going to take benefit out of that. Right? So what do you do for that? You provide depreciation. This concept also will cover later on, but just to briefly tell you, depreciation is that, like this furniture today you are able to sit properly, but tomorrow it will require some maintenance. Right? So what we do is we depreciate its value. That today it is worth 5,000. After 1 year, say 10. There are depreciation rates defined in the Companies Act. Based on that, what you do, every year you provide depreciation which goes to the income and expenditure account. So the value of the asset reduces every year. Today it is 5,000, tomorrow it may be 4,000. Why? Because 10%, say 20% depreciation minus 1,000, so 4,000. So
Can you give an example of an OPEX?
Operational expenses is your direct labor, direct revenue expenditure also we call it. So basically, which is going into the income and expenditure account, means the benefit of that is only for that particular year. So raw material, office expenditure, rent, whatever, salaries, wages, all these are operational expenses. Why? Without that you can't operate the plant. Right? Repairs and maintenance. And this benefit is only for that particular year. Right?
So capex is for long term and OPEX is
Yes,
mostly
for a short term. And basically we define it by the benefit for 1 year, and capex is more than 1 year. Direct administrative, selling and distribution, these are also the type of expenses. Direct expenses means, like we talked about, direct labor, wages direct raw materials. These are all direct expenses. Administrative is basically your say office rent, office personal salaries. Selling and distribution, to sell, advertising, marketing cost. Financing, example of financing cost.
Debt servicing.
Huh?
Debt servicing. Debt, loan servicing.
Yeah, interest. Yes,
Interest.
very correct. Debt servicing, very true. Interest cost, right? So those are bank charges. Those are financing costs. This is a cost sheet normally we prepare to determine what is the per unit cost of a particular product. Direct material, direct labor, direct expenses. What is the example of direct expenses? Freight, you bring that raw material into the premises. So freight, you incur transportation cost. So this is directly related to that raw material or whatever. So that is a prime cost. Then add works overhead. Work overhead means factory rent or factory, whatever you incur for that, so that formulates your works cost. Add administrative overheads means salaries or office rent or cost of, that gives your cost of production. Add selling and distribution overheads, that is cost of sales. Then you add profit to it, and then you derive your sale price. So minimum, though your competitors may be having a lesser cost, but you can't do at a loss, right? So this cost sheet will help you to determine what is the expenditure actually you are incurring. Based on your past trends, you will try to take this cost sheet. Based on your future predictions, you will try to make your cost sheet. Divide by the number of units, you will have the cost per unit. So yeah.
So I had a doubt about how GST works. Sometimes you get like deductions and all. Can you just like elaborate on how we can get deductions or how we have to pay it?
See,
Is it considered
basically,
an expense
I'll shortly, because GST is a very vast topic, but still just to, GST is basically a tax, right, on your product or services, so which you have to pay to the government. So suppose your product is priced at 100 rupees, suppose it is 18% GST, so what you will do is 100 plus 18, 118 you will price to the customer, right?
So for the customer, the expense is 100.
100 plus 18% tax, say 18 rupees, so 118. You get 118, out of which 18 rupees you pay to the government. Okay. Now this is your sales, right? Now you have purchased some raw material for this, for producing this sale item. So when you have purchased an item, say you have purchased for 50 rupees your raw material, on which again you have paid some 18% GST. So 9 rupees you paid. So this 9 rupees which I have paid to the supplier, today when 18 rupees I have to pay to the government, I will take input credit of this 9 rupees and I will pay only 9. I will not pay 18. Why? Because 9 I have already paid. So there is no double taxation in. But if your services are not taxable, then you cannot claim this input tax credit. We call this as input tax credit. You cannot claim this if you're, for example, our educational institute, our services, we take fees from you, from the students. So there is no GST on it. Then whatever materials I am buying, I have to pay GST. But I can't claim credit. Okay? I can't claim credit. I have to pay. My expenditure to that extent is more. In this case, my expenditure is this 9 rupees less. Why? Because I have paid less GST. But if I am not paying GST over here, I can't claim this credit. So my expenditure is actually 59. Right? Purchase department knows that.
Just as a follow-up on that. So how long is the credit valid for?
This is valid. You can carry forward.
Perpetually.
Yes, yes.
Okay.
You have to file your returns of income,
Yeah.
where you have to declare that so much is my accumulated credit. So this is cost sheet is very important. You should always make this cost sheet so that you get an idea what is the per unit. Unit of sale is very important, right? Unit price is very important and unit cost is very important. Unless you know this, it will be very difficult for you to. This is just a small exercise. I think you all can just tell me answers.
Just a minute, the previous
Yeah.
slide. What's the difference between unit price and unit cost?
This is the unit cost.
Which one?
Up till here, you are incurring all cost. So you are deriving the unit cost divided by the quantity. If you add profit to it, and then you are selling the product at a particular price, suppose your cost is 90 rupees, you are adding 10 rupees profit, and you are selling the product for 100 rupees. So this is the unit price of the product. How much you are selling for, and cost is how much you have incurred, expenditure you have incurred. So the difference between these two is your
Profit. So unit price is the selling price and
selling price.
unit cost is the cost.
Yes, cost. How much cost you have incurred. So we normally, these are the terms we use. Right? So you should be aware of these terms also. This is just end of my lecture, so you can, in fact you can do it at home also, this is, but you can ask me questions.